Today's cardinal lesson is about using IRA and 401k money to buy long-term care insurance, and to do that with a single premium. So that's kind of a mouthful, and I've got some more numbers than I do typically in one of these videos, but this is about a real case and a real family who are some really neat people. And as we've gone through this, I just really wanted to do a video about it, so here we go. This couple, he's 63, she's 65, he's still working, wants to retire. They've got over $2 million in his 401k account, substantially over that, and they've got about $15,000 aside from that in a checking account or a savings account, and that's about all the money they have besides that 401k. So that's problem number one, is we got a big bulk of money that every time we pull money out of there, we got to pay taxes on it in order to live. So it's a good problem to have, because they've got a substantial amount in there, but they're going to get ready for a big tax bill. Now, in addition to the two of them, they only have one child, and that one son, who's a real blessing, is a special needs son. And he's got plenty of issues, and they've already, before they met us, had set up a special needs trust. And really their main priority in this financial planning is, when we're gone, what's going to happen to him? What's going to happen to our money? How's it going to flow to him? And what's that going to do to his government benefits, that kind of thing. It's all the reasons you'd have a special needs trust. So this video is really not about special needs trusts, but it's kind of an overriding issue, and it's certainly for them. This video is about long-term care and IRA money and life insurance, but how the two tie together is these folks are able to pay one premium of IRA money that they haven't paid tax on yet, and then at the very end of this thing, if neither of them use the long-term care, because a lot of people buy this long-term care insurance and never use it. They just pass away by other means, and they need, or they use it a little bit. There's almost a $200,000 life insurance policy inherent in this thing, and that's going to go to the son, providing they don't use long-term care, and that's going to come to him tax-free. Real problem is leaving a bunch of IRA money to any children, for that matter, but especially to a person that's the benefactor of a trust, and paying the taxes and getting benefits kicked out. So these folks really liked this whole concept. Other fact is, they like the single premium, but they don't have money laying around other than in this big balance in this 401k. So if we're going to do something with a single premium, this is what they were going to do. Now, her mother just passed away in the last 6 months, and she was in care for 11, 12 years, quite a long time. And she had this lady looking after her, and she really looked after all her affairs, went to see her every day, and they're not going to be in the same situation with their son, as he's not going to be able to provide that care or that oversight that children do. So that's one problem. The other problem is they can't be chewing up all their money in their 80s and 90s paying for long-term care when they're at most worried about taking care of him. So long-term care insurance was also very important to them, and a large benefit policy. So that's why we went with, to start, $6,000 a month, and why we put inflation on it, because these folks are probably not going to use their long-term care insurance for 20 years, 30 years. And so there's a 3% inflation on this policy, so that when you get to like the 20th year, instead of $6,000 a month, the monthly benefit is $10,518 a month, and the maximum benefit for both of them is $701,000. I mean, keep in mind, we're covering two people on this, with this one single rollover of $256,000. Now, what goes on internally within the policy is the insurance company is going to take $30,800 a year out of this pot, and they're going to do that every year and put it into the life insurance. So they're going to pay for 10 years this $30,800 a year, and then the policy is paid up, the long-term care life insurance is paid up after 10 years. But for them, it's paid up right away because this is all the money they're going to ever give the insurance company. Now, they are going to have to pay taxes on this $30,800 every year that's moving internally at the insurance company. So there's going to be a tax bill there. They're ready for that. But what it does is every number on this page is guaranteed. It's not going to be different. They're not going to be getting a letter from the insurance company 20 years from now saying, it costs us more, so you got to send us more money, or we're reducing your benefit, or we're lowering your inflation rate, or, you know, there's many long-term care policies that they can change benefits and features and raise premiums. All of this stuff is all guaranteed from the insurance company. So these people are buying peace of mind with this. And so the lesson I'd like you to get from this video is that using a chunk of your IRA money is one option to buy long-term care insurance, or life insurance long-term care insurance, what's referred to as hybrid long-term care. That's one way to pay for it, and it's a very popular way because that's where people have substantial sums. So this is you don't have to have $250,000 that you part with in your IRA to buy one of these policies. I mean, we have people come to us that they say, okay, so I want to do 100,000 of my IRA money. I want to commit it to this, move it to the insurance company. What will that buy me? And so we can work all the numbers. We can certainly put together a substantial policy for one person with $100,000. Now, when we get two people, it's going to skimp it a bit to cover two people with $100,000, but certainly with a benefit of like half this much money, where we had perhaps out of one of their IRAs, like 125, 130, 140,000, we can put together a substantial policy for two people with or without IRA money. So this is certainly an option worth considering. I'm Hans Scheil, and I thank you for listening.